Hi, this is Richard Flax at Moneyfarm with a regular market update. It's been a busy few weeks, but there are four things that we'd focus on. First, in the UK, we've seen yet another Prime Minister installed at number 10. After a significant bout of bond market volatility, financial markets seem relieved, at least for now. We seem to be heading towards a new era of austerity, with the prospect of tax hikes and spending cuts on the horizon. According to some reports, the new team would like to see a 50-50 split between the two. For context, after the financial crisis, then Chancellor George Osborne apparently favoured an 80-20 split, with more spending cuts than tax hikes. Even if financial markets appear calmer, we still look set for a challenging period in the UK over the next quarters. Second, it's earnings season, notably in the US. There had been concerns that corporate earnings would be weak, and they were, but still perhaps better than some had feared. We've seen some relief in equity markets in October, even if some of the headline results from the tech companies have given us some pause. European companies also showed some resilience, partly helped by a weaker currency that boosted overseas earnings. While the quarter's been better than feared, we do continue to see expectations drift lower as analysts factor in the impact of lower economic activity. Third, we've seen the 20th Congress of the Chinese Communist Party, with President Xi confirmed for a third term in power. On the whole, the focus there has been more on control than on growth, and that may prove challenging for risky assets in China. Although when you look at the difficulties in the real estate sector, you'd argue that more financial discipline there would be a positive. Finally, inflation has remained stubbornly high, and central banks continue to hike rates. We expect this trend to continue, although markets haven't really changed their view over the past few weeks of where policy rates will finally end up. We'd expect to see inflation weaken over the coming months, but it's proving a slow process. So we expect a challenging economic environment, but generally companies appear to be managing quite well, and starting valuations look appealing relative to history, particularly for those with a longer-term outlook. Thank you for watching, and look forward to speaking with you again soon.